everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 3 from the book Crypto Swing Trading by Jide George. It has been created with the help of AI. The chapter is titled Entry Strategies. You can read the original post at samfury.com.
Hey everyone, welcome back. So you're ready to take your crypto swing trading to the next level.
That's right.
But maybe you're feeling a little unsure about how
When to get in.
when to time those entries, right?
Exactly.
Well, today we're going to help you out with that.
Absolutely.
We're diving deep into Chapter 3 of Crypto Swing Trading. It's all about entry strategies.
Yeah, and nailing those entries is really the key to
Absolutely.
unlocking those swing trading profits.
So let's jump right in. The first strategy George talks about is breakouts.
Classic.
Yeah. Now, most traders, have probably heard of breakouts.
Right.
But what I really liked is that he goes beyond the basics,
He really does.
and he emphasizes understanding consolidation periods first.
Ah, yes, consolidation, the setup, the build-up.
So for those who maybe haven't heard that term before, what is a consolidation period?
Basically, it's when the price of an asset is kind of stuck, bouncing between these support and resistance levels.
Like ranging, right?
Yeah, it's like it's trapped in this range.
Exactly. And George makes this really interesting point.
Oh, yeah.
That the longer the consolidation period, the stronger the breakout can be.
It's like imagine you're compressing a spring, right?
Yeah.
The more you squeeze it, the more potential energy it builds up.
Yeah.
And when it finally releases, exactly, it explodes with force.
So those breakouts after a long consolidation,
yeah,
those are the ones to really watch out for.
absolutely.
But how do we know?
Right.
Is it a real breakout,
Yes, the million-dollar question.
Yeah.
Well, George gives us a really helpful clue.
Okay.
Volume.
Volume, yeah. He talks a lot about that.
Volume is key.
Mhm.
When you see a surge in volume as the price breaks through that resistance level,
Okay.
that's a really good sign.
That's a good confirmation.
Yes, it's confirmation that there's genuine momentum behind the move.
It's like the market saying, this is the real deal.
Exactly. It's a vote of confidence from the traders.
Okay, so we've got breakouts. Let's move on to another strategy that George discusses, which is retreats.
Ah, retreats.
Now, these can seem a little scary at first.
Yeah, it's natural to feel that way when you see the price dipping.
Yeah, especially if you're new to swing trading.
Right.
You might think, oh, no, is the trend reversing?
Exactly.
But George actually argues that retreats can offer fantastic entry points.
They absolutely can. But here's the catch.
Okay.
You got to make sure that the overall upward trend is still intact.
So it's not just any dip.
No.
Yeah.
You need to look for signs that the price is finding support.
Okay, so how do we do that?
Well, there are a few key levels to watch.
Okay.
Previous resistance levels that have now flipped to become support.
Oh, that's interesting.
Yeah, that's a classic one.
Yeah.
The 50-day moving average can also act as a strong support level during a retreat.
Okay.
And then there's a Fibonacci retracement level.
Now, those could be a little tricky, right?
They can be a bit complex for some traders.
Can you break those down for us a little bit?
Sure. So Fibonacci retracement levels basically stem from this mathematical sequence
Okay.
that, believe it or not, you actually see throughout nature.
Really?
Yeah, it's pretty fascinating.
Okay, I'm intrigued.
So traders use these levels to identify potential support and resistance points
Okay.
based on how much of a previous price move
Okay.
the price has retraced,
So if the price swings up
Yeah,
and then pulls back a bit,
right.
the Fibonacci levels might indicate where it could find support.
Exactly. Common retracement levels to watch are 38.2%, 50%, and 61.8%.
Okay. So if we see the price pulling back during a rally
Yeah,
and it finds support near one of these Fibonacci levels,
right.
that could be a signal to consider entering a trade?
It could be, but it's important to remember. No indicator is perfect.
Right, of course.
You should always combine Fibonacci levels
Yeah.
with other forms of analysis like chart patterns and market sentiment.
So it's all about getting confirmation from multiple sources.
Exactly. You want to see those signals align.
This brings us to a really critical aspect of swing trading, which is timing.
Ah, timing. The art of knowing when to strike.
Because you could jump in early,
Right.
trying to catch the move from the very beginning.
Yeah, and risk getting caught in a fake out.
Exactly, a false breakout.
Oh, the worst.
Yeah. Or you could wait for confirmation,
Mm-hmm.
but then potentially miss out on some profits.
It's a constant dilemma, isn't it?
It is.
Mm-hmm.
So what does George say about this?
Well, he actually offers a couple of really helpful approaches.
Okay, let's hear it.
First, he emphasizes patience, especially for newer traders.
Yeah.
Don't rush into a trade just because it looks exciting.
Yeah?
Wait for that breakout to really solidify before committing your capital.
Okay, so patience is key.
Absolutely. But then there's also this idea of splitting entries.
Okay, I've heard of that. Tell me more.
So instead of going all in at once,
Right.
you divide your position into smaller chunks. Okay, so you're not putting all your eggs in one basket.
Exactly. So, for example, you might enter, say, a third of your planned position when you see those early signs of a breakout.
Okay.
Then, if the price breaks through resistance
Yep.
with strong volume, you add another third.
So you're scaling in as the trend confirms.
Precisely. And if the momentum keeps building, you can always add that final third.
I like that approach. It seems like a really smart way to manage risk.
It is. It allows you to participate in the move,
Yeah.
but without overexposing yourself if it turns out to be a false breakout.
Okay, so let's say we've identified our entry point.
All right, time to execute.
We're ready to actually place our trades. What does George say about using different order types?
Well, he's a big fan of limit orders, especially for breakouts.
Yeah, limit orders make a lot of sense in that scenario.
They do. He suggests placing your limit buy order just above the breakout point.
Ah, so you catch that upward move.
Exactly. That way, you ensure you get filled if the price makes a strong move in your direction. And on the flip side, when entering on a retreat,
Right.
you could use a limit buy order at your identified support level.
Precisely. That prevents you from chasing the price up and overpaying.
Okay, so we've covered breakouts, retreats, timing, and order types.
Yeah.
Any other key takeaways from George's approach to entries?
Yes, and it's something we've touched on already, but it bears repeating.
Okay,
Patience and discipline are absolutely paramount.
could not agree more.
Avoid FOMO at all costs.
FOMO, the fear of missing out.
Yeah, it's a trader's worst enemy. It can lead to impulsive decisions, sloppy entries,
Bad trades.
yeah, and ultimately losses.
So before you enter any trade,
Mm-hmm.
take a deep breath, make sure your signals are aligned,
Right.
confirm your thesis, and then execute confidently.
That's the way to do it. And remember,
Yeah,
no strategy works perfectly in all market conditions.
right. That's an important point.
George emphasizes adapting your approach
Okay.
based on whether it's a bull market or a bear market.
So what are some ways to adapt these entry strategies for different markets?
Well, in a bull market, when the overall trend is up, focusing on breakouts and momentum plays can be very profitable.
Right. Ride that wave.
Exactly. But in a bear market, when the trend is down,
Things get a little trickier.
yeah, you might want to consider range trading or even short selling.
Okay, so it's all about being flexible.
Absolutely. And a trading journal can be a huge help here.
Oh yeah, I was just going to say that. Keeping a trading journal
Yeah, tracking your trades
helps you identify which setups work best for you.
in different market conditions.
Okay, so what does all this mean for you, the listener, who wants to improve their crypto swing trading entries?
It means you need to develop a holistic approach,
Yeah.
combining technical analysis with market awareness.
Don't forget risk management
Absolutely.
and a little bit of intuition.
Yes, trust your gut.
So as you continue your swing trading journey, I'd challenge you to ask yourself this.
I like this. Hit them with a question.
How can you best combine these entry strategies that we've discussed with your own risk management plan and personal trading style?
To effectively navigate
Yeah.
the ever-changing world of crypto.
That's the million-dollar question right there.
It is. There's no one-size-fits-all answer.
Exactly.
Every trader needs to find what works best for them.
And remember, mastering these concepts takes time and practice.
It does. Don't get discouraged if you don't see results overnight.
Keep studying, keep experimenting, and never stop learning.
That's the key to success in this game.
Happy trading, everyone.
See you next time.
Bye.
Bye.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries, which you can download as PDFs, as well as other exclusive content. It's all completely free at samfury.com.